Hello and welcome to the UpStreamLife.com. I'm your founder and editor, Vishal Krishna. I want to talk about startups. I want to talk about a company that has started a startup program. I'm talking about WebEngage. Obviously, WebEngage is a retention and marketing automation platform. I'm sure startups need the tools to engage with customers, but I need to find out how the startup program benefits all you guys out there who are going to use WebEngage. Hey, Nitya, how are you? Nitya, by the way, leads the WebEngage startup program, and he has been with them for 6+ years. Nitya, hello again. How's it going, man?
Hey Vishal, going good. Thanks for having me today.
So great. So let's start with the program immediately. Take us through a brief journey of WebEngage and what it does. Specifically, where does the WSP bit fit in? For those of you watching in, it's the WebEngage startup program. WSP is just that. Go on, Nitya.
Sure, Vishal. So let me give you a little background about the company WebEngage and then this WSP as well. So WebEngage, we are a company headquartered in Mumbai, started in 2011. So more than almost 12-year-old as a company. And we've been around for some time. Now what the WSP is all about is it's WebEngage startup program. And I'll give a little bit of backstory how this began. So at WebEngage, we always used to end up talking to or encountering these young early stage startups who used to be very small, very early. And WebEngage used to be too complex and too expensive for them to actually even look at or consider. And that's how the whole genesis of this program started, saying that how do we solve for these early stage startups and have something which is actually meaningful, beneficial for these startups. And that's how the startup program begin, where we give credits and we give a whole bunch of benefits and hand holding and guidance to these early stage startups. So that's a little bit of overview on WebEngage and the startup program possibly.
Okay, I mean, did startups reach out to you and say that we need a program like this? Because a lot of the large corporates have done it. So is that the genesis saying, okay, the big guys are doing it. We have grown to a size. Anyway, people need retention on marketing automation tools, and they need the credits. And that was the starting point.
Sort of, that was really the genesis, which was two parts, like you said. So one, we were observing bigger corporates like say AWS, who's been doing this for years and one of the pioneers of building an ecosystem for startups. Google for startups as well, similarly. So we were looking at what these corporates are doing. WebEngage was also reaching that maturity, almost 9 to 10 year old as a company. So we were at that mature stage. And on the other side, while talking to prospects and customers, we used to see these young early companies who were very enthusiastic about using WebEngage. But the challenge used to be the higher price point, the complexity of using a platform like this, etc. So we said, let's look at what others are doing and also the problem statements that are coming from our customers and prospects and try and build something which solves it uh, first principles. So that's when we started looking at what other companies and corporates are doing, what problem statements the startups face, etc. usually. And what we figured out is two things. One is the cost part of it, because the startups have limited funds budgets. So they always scrutinize every cost, every dollar that they spend. Second is, even when they get a lot of these free benefits and perks, etc., from different companies and platforms, it becomes very complicated for them to figure out which is the right platform or credits for them to use. How do they make the most out of it? Because most of them, what they say is, hey, this is a credit which is available for you for free on the table. You and this is a documentation and steps that you have to read through and juggle with. And then you have to go figure out what to do, how to do, scratch your heads around all of these things. So there were these two problems, cost as well as what to do, how to do. And that's where we took an approach to create a very structured program to solve both of these problems for these startups.
Okay, I want to know a couple of things here. I want to know, the program in detail, right? Describe the engagement. I know you've set out the requirement and what they want, why they need it, but how does the program really work?
Absolutely, Vishal. So what we do is, Vishal, we work with a limited set of startups or a curated set of startups every year, and we work very deeply or hands-on with them. So there are two, three parts to the program. One is the startups, they get WebEngage credits for free. So what we say is, for 6 months, you use our platform for free without paying anything or without any investing anything upfront to use the platform. One. And this translates into roughly $25,000 of platform credits, which is like a notional value that we put to the benefits. But we go a step further beyond that, which is where we are saying, along with the product, our team will actually work with you and your team to solve this from a first principle perspective. Because what we saw is a lot of these startups, the founders or the teams are very generalist in the first initial 5 to 10 member team. So you do not really have a specialist who knows how to look at retention, analytics, data, all of these things. And that's where our team comes in and solves these problems for them by saying that this is how you should be implementing the platform, how you should be looking at the data. These are the best practices which are there, which you can follow from the industry learnings that we have. These are the benchmarks. And these are the mistakes that you could avoid in advance. So we be enabling with all of them. So we have the credits or free perks, but we also have our team where there are account managers and growth specialists, which work very hands-on with these startups to enable with all of these things. So it's like a cohort or an ecosystem that we've created to help the startups sort of understand and build their retention engagement very early in their cycle. And over a period of time, what we've also grown or created is like an ecosystem where we are able to connect these startups to, say, a vendor or an advisor or a VC for that matter. If we've already created a network, so what we're trying to do is connect these startups among themselves, also them to other ecosystem partners, etc. So we're now evolved into like an ecosystem in itself now over the last couple of years.
Okay, great. Because you guys also help a lot of D2C companies, perhaps you can give us an example. And you said mistakes that they don't have to make, which is important, right? Maybe marketing in the right manner, and whether it's email marketing, newsletters, and they shouldn't miss out on anything. Give us those typical mistakes that these D2C brands do, and how you can help their marketers actually retain customers.
Absolutely, Vishal. And these are some of the things that we noticed in the last 2 years, which was in the boom of the 21-22, where there was a lot of capital coming in. And we were seeing a lot of startups making some of these mistakes or some of these oversights, etc. And we were always trying to sort of say out or educate the startups, saying that what is important is retention. You need to look at those metrics, etc. So to give a little bit of overview, what we observed what was a lot of these startups, because they end up getting a lot of funding or capital, etc., and they have to show those growth metrics month on month, quarter on quarter. So we saw a lot of startups chasing growth, and this growth, a lot of this growth was actually fueled by acquisition and by investing money in channels like Google ad networks, Meta ad networks, etc., to get more and more new customers into your platform to try out your brand or product as a D2C brand. But what really ends up happening is when these companies don't go deeper, when they actually go deeper and look at the metrics, etc., they realize that very few of these customers actually come back and buy for the second or the third time, which is where you really start making money, because a lot of these brands were losing money on the first order. So they were either burning money or they were hardly breaking even, which means for them to actually make a sustainable, profitable business, they need the customers to come back, a loyal set of customers who are buying from the brand again and again. And this is what traditionally a lot of businesses have been built, a big or a good brand has been built. But in a lot of capital coming in and chasing of growth, we saw this taking a back seat, where you were not focusing enough on looking at the retention, repeat metrics, loyalty, etc., and focusing on getting new and new customers as much as possible. And another tricky part there is, at certain point of time, you will end up getting or hitting a ceiling, because you cannot like, there are as many customers in India, whatever, say if we look at the number, maybe 2 million or 5 million or 10 million, the e-commerce users actually end up capping out at that point of time. So if you've targeted all of them at one point of time, how would you acquire or get your next phase of growth? And this is where retention and loyalty, etc., kicks in, where you need to have a healthy balance between getting new customers and also getting business from the existing customers. So this was one of the large mistakes that we saw in the whole funding boom, that a lot of D2C brands were sort of not focusing on as enough.
Yeah, give us that typical, say, the spent on customer acquisition, but not on repeat purchases, right? Give us some numbers, say, for every, say, 1,000 rupees spent for purchase of, say 200 rupees, for example, they need to have the customer coming back at least 20 times to make another profit of 1,000, right? But that's not happening. That's what you're saying.
Absolutely, that's correct. So
Okay.
to give an example, say if we take a typical D2C brand who has a average order value of say 1,000. Now the cost of the goods itself would be say if they have a margin of say 70%. So the cost of good itself is say maybe 20-30%. So you remove that 300, you're left with 700 as a share of pie. Now to acquire that customer itself, some of these brands, they were spending about 400 to 500 rupees to acquire that customer. So you subtract that as well. And then you have your shipping logistics cost, you have your employee cost, the payment charges, and all of those things. So at the end of it, you were hardly making money or very little money on the first order. Now, if that same customer comes back for the second and the third time, you don't have to spend that same 400 or 500 to acquire the customer again. So that's a direct profit, or that's a direct margin that you are saving on getting the customer to buy again for the second or the third time. So that's the big leap or the advantage that the brands actually see when and that's the magic where the magic actually starts for the business, where you see the users coming back multiple times. You don't have to spend to get the user back, and that's a very solid sustainable business model to actually build for.
Great point. I think that's why the program makes sense, and we've set the context. And now I would like to know, the criterion. What are the benefits, the criteria, and then, let's talk about the support. Benefits, criteria, support.
Absolutely. So in terms of benefits, Vishal, couple of things that we give. I'll list those down on a very high level. One is the startups, they get WebEngage credits for free, which is of $25,000 value, which translates into nothing but use WebEngage for free for 6 months. You also get messaging credits for sending out free emails, SMS, etc. So you get all of these credits from WebEngage. You also get hands-on customer onboarding, customer success, and growth advisors. All of this, by the way, is actually charged for or paid by our enterprise clients. So we really charge for the services for our enterprise clients. But for startups, we do this as well, pro bono, where we give them a lot of hands-on advice, support, etc. Because it's important for them to also know what to do, how to do, and not get stuck in just figuring out what has to be done next. So that's the second part. In terms of what we provide in terms of benefits, etc. Third is we've also started partnering with a whole lot of uh, other ecosystem partners who are saying, hey, we would like to give additional credits or benefits to the folks who are part of the WebEngage startup program. So we have a lot of additional perks and benefits also being bundled for these startups. So those are the benefits which are given to the startups. Now, in terms of the criteria to look at who this is meant for, it's nothing but for early stage startups who are at like a pre-seed or a seed stage, who've raised say at least some round of funding, or even if they're bootstrapped, they are looking at a growth mindset. That's really important. So you are at an early stage. What we also look at is the startup needs to have a little bit of traction and users, because without having users, it's difficult for them to actually look at data insights and then bring those users back. So you need to have a little bit of early traction. And from a WebEngage perspective, we are able to add value to a lot of consumer or B2C companies, either D2C, fintech, online learning, gaming, content, all of these consumer focused companies. So we require the company to actually be from a consumer space. If they are from a enterprise SaaS or a deep tech, etc., we might not be able to add a lot of value because the GTM and marketing for them is very different. So we focus on the consumer companies, and specifically for us to avoid a lot of companies to just try and get these freebies, even if they are bigger companies. So we've put a cap or a ceiling saying that if the company has crossed 3 years as a 3 years mark, if the company is more than 3 year old, and if they have more than 50 employees, then they are not really be eligible to be called a startup. So that's another cap that we have put, because initially we saw a lot of bigger companies used to come and say, hey, we are still a startup, etc. So just to avoid and make sure that only the real early stage startups which have limited funds and bandwidth, etc., are making benefit out of it, we put this cap as well. So that's the criteria, which is you have to be a consumer company, have some bit of traction, and you need to be at a really early stage to be using this credits and program. So the support, like we were mentioning, is they get a lot of customer onboarding, success, and growth advisors from our team, which are actually working very hands-on, spending time with these startups every week, uh, and helping them learn and implement the best practices that we've acquired over these years.
All right. Okay, let's move on to things there. I mean, everything Depends on the success stories in the program. How old is the program, firstly? Talk about
So,
the success stories.
yeah, program. So we launched this program towards early 2021. So about 2.5 years we've been running this program. It actually started as a pilot project where we said we have this hypothesis that startups actually might be needing a product and we have to make it much more suitable for them. So it started as a pilot project with a couple of team members, which is now scaled to a 20 plus member team here at WebEngage. So it's a team or a startup in WebEngage itself, you could call like that. Some of the success stories, I'd like to mention this one, which is from this brand called Perfora, which is actually very close to my heart as well. They were on Shark Tank season 2 a few months back, and they got popular or viral after that episode went on air and they got a good amount of funding, etc. But the success story for us, or the story of our association with them, goes way long back. This is December of 2021 when Perfora was about 5 to 6 months old. So Perfora just completed 2 years, by the way, just last week. So Perfora was very early in their journey. This was December 2021, very small team. So they had about 5, 6 odd members and very limited SKUs as well. So they had about 5 to 7 products. Half of them were even out of stock at that point of time because there were some of the supply chain disruptions and those kind of things. So that's when Perfora started. We started a conversation with the Perfora team, and what they said was, "Hey, we're trying to build a very strong brand." The founders had a great culture of building a strong brand, having good of those kind of things. They're still very picky about the kind of messaging and communication that they do, the kind of branding that they do. But going back to December 2021, we were having the conversation with their team, and they said we want to build a very strong brand, and we want to use WebEngage as a part of our stack and as part of our journey. So that's when our journey started. From then till now, so they are about 200 150 200 odd products, about 70 80 or more employees. They've raised a series A funding, etc. Post Shark Tank, the brand has taken off by multifold, etc. So that's been a great success story where the founders and their founding teams, they were looking at retention, building a long-term sustainable business, because oral care as a category inherently needs to have a lot of repeats. So if you're buying a toothbrush, toothpaste, and a mouthwash, you should be buying from the same brand. You don't switch those brands regularly, unlike say some other categories. So they really wanted to focus on building good retention, building good comps, and WebEngage started working with them 6 months into their journey, and we continue to be part of their growth story, growth journey. So that's been one of the great success stories for us. And obviously, after Shark Tank, the brand has taken off even further. So we are very excited to continue working with them till date.
It's interesting. You answered most of my next questions. And I mean, how do you help startups overcome these challenges? And, what are the typical challenges that they faced in their growth journey? These are the ones that you lay it out. Are there any others other than what you've just mentioned?
Oh, there is one more challenge which is there, possibly elaborating on some of the points that I mentioned earlier, which is now with capital becoming scarce this year and the acquisition costs going up every single month. So that continues to be a challenge where the CACs are going up. You have limited funds to deploy, etc. And the channels for acquisition remain those same traditional channels or digital channels, which is Meta and Google ad networks, and some of the other new age channels like say influencer marketing, celebrity marketing, etc. So the channel mix hasn't really increased as such to acquire new customers. And that's where WebEngage is actually playing a key part, which is where you have limited channels to acquire. Why not go back to the existing customers, re-engage, retain them, and make them loyal customers? So that's one of the large challenges, which is diversifying channels and de-risking your dependency on channels, etc., which WebEngage is trying to solve for these startups. Certainly more important this year.
Okay, got it. Those are wonderful answers. Every startup program needs to be measured, right? One is that. You also have to look at monetizing it. The success metrics obviously are how people use your credits, use your advice to grow their business, retain customers, obviously. Maybe they, instead of purchasing one time, they purchase 5 times and lead them to profit, right? And that's a specific way to measure for you, perhaps one of the ways.
Yes.
mention if there are other ways to monetize this also. So measuring success and monetizing it. Please let me know.
Sure. So in terms of measuring success, Vishal, so the North Star that we're looking at, while you mentioned some of the soft metrics, which is them being able to look at retention, improve the retention rates, and build a better business, the North Star that we really tracking or looking at is how many of these startups end up becoming successful. And the metric that we are looking at right now is how many of these startups are successfully raising a follow-on round after joining our program, etc. And that metric stands at roughly 30% of the startups who join our program, they end up raising a follow-on round after being a part of our program. So that gives a little bit of validation that the startups are able to improve their metrics, etc. Go on and show these metrics to their investors and get in a follow-on round. So that's the metric that we're really looking at, which is 30% follow-on funding after joining a program. In terms of monetization, etc. So for us, and this has been from the day from the beginning when we started this program, is we're not looking at this program from a lens of monetization. So for us, WebEngage as a company, we've been around for more than a decade now. So for us, it is about giving back to the ecosystem. That's one of the key part. Second part is also about creating that awareness and education that while you are acquiring customers and chasing growth, retention and retention led growth is also equally important. So those are the two large things that we're looking at in terms of why we are running this program as well. And in terms of longer term thoughts, etc., we've had some of these thoughts that whether we should even say set up like a syndicate or a fund eventually to be able to fund some of these startups that are becoming a part of the program, etc., because we end up working with or encountering with very interesting startups and founders, etc. So there's definitely a good opportunity for us to think about that maybe somewhere down the line when we are also maturing as a company and team, etc. But as of now, we don't look at it from a pure monetization lens perspective.
Time and money, very important. The investment on your side is to put in time for these and give them credits. What is a
Yes.
typical investment for a startup also in a program like this and for you?
Absolutely. So in terms of time, etc., if we measure, so we end up spending about a couple of hours every week with these startups. So our team actually spends a couple of hours every week with these startups to help them and enable them on all of these things that we were talking about. In terms of investment, so whatever investment we've been doing so far is all indirectly related to the credits of the platform as well as the people or the resources that are working on all of this program, etc. In a longer term, like I was mentioning, the idea is maybe if we could also enable with some kind of capital investment or grants or equity or something like that, so that we are going even a step further, invested, or sort of there's a skin in the game for us also to work with these startups much more hands-on. So that's one of the direction or some of the things that we're thinking in a longer run. But right now, that's really the investment that we're putting in terms of time and efforts, etc., and resources in this program.
Okay, I'd like to know the key features. Okay, I mean, key features that startups use from WebEngage and what do they find advantages to themselves? Give us those features, and are there any specific set of features that they really have to have in their portfolio from WebEngage?
Absolutely. So some of the key are the most used features and which are specifically from a startup's perspective is so we have a customer data platform or a CDP which helps these startups consolidate all their first party consumer data in one single place. So for example, if you have your website where you are selling your products or you offering maybe like a content service and you have a mobile app as well where the users can use all of this. Now, how do you consolidate all this data in one single place and have a single view of the customer wherever they are on multiple touch points? So that's the CDP or the data platform, which gives one single source and view of all the customer. On top of this, there is a whole lot of behavioral and product analytics, which is things like what is the behavior of the user on the app or website, how frequently are they using the app and website, how frequently are they browsing at the products, how frequently are they buying, etc. So things like funnel analysis, cohort analysis, user journeys, etc. And app and website usage stats and metrics. So those metrics help the businesses understand their retention rate, engagement rate, etc. Now combining this data and insights is where our engagement or campaign manager comes in, where you can create different cohorts or segments of users, which is a new customer, existing customer, loyal customer, etc., etc. So you create different segments or cohorts of customers and then send them very personalized, targeted messages. So if you abandon the cart, you get maybe a 10% off automatically. If you purchased a Perfora or a personal care product today, after 30 or 45 days, you have to buy that product again. So you automatically get a reminder saying that, hey, it's time to restock your product and buy this product again. So those kind of personalized messaging, etc. And then the third part is how do these brands or startups personalize the experience on the website and app for these users. So, for example, Netflix and Amazon, they've spoiled consumers today, have set those benchmarks that every time you open Netflix, it would be different for a Vishal or for a Nitya or for Amazon for that matter as well. So, how can these brands, without investing a lot in data and technology, use a platform like a plug and play to personalize the experience on the website and app as well? So that's the third piece which we solve for these startups. So data, insights, campaigns, and personalization, those are the core features that the startups end up benefiting or using from our platform and credits.
So they like insights more, or in any order of these data, insights, and personalization?
So
All three they like?
So in the order, it would be insights, because for early stage startups, it's important for them to know the consumers, their metrics, and their behavior, etc. So insights plays a more importance, followed by the campaign management, where they want to take actions on top of these insights. So those two happen to be maybe interchangeably the top used or top recommended products for these startups.
Okay, great. I want to know three things, right? You set the course for a company which used your services, and that's how you mentioned them also. But I want to know, after acquisition, there's customer engagement and retention. Among the three, at every stage, obviously acquisition becomes important, but engagement and retention, what is very important for you? And I think WebEngage will focus on the retention part of it. But what is important? Why is retention important if after customer acquisition? Why not engagement?
Absolutely. Actually, how we look at this, Vishal, usually is it's like a flywheel. So you keep acquiring customers. You need to keep them engaged enough, which means you need to have, if you are a product company, you need to have products which deliver value for your end consumers so that they're engaged. Or if you are a commerce company, you need to have products which user ends up using at a certain frequency. So after acquiring customers, you need to make sure the customers are engaged enough with the products or services that you're having, which would in turn lead to retention, which is the consumers coming back repeatedly. And eventually, this would also lead to referral and sort of advocacy, which is the loyal and happy customers would end up referring new customers. So you end up acquiring new customers through that loop. So it's kind of a loop where you acquire customers, you want to keep them engaged with your product and services so that they are retained and that you continue monetizing them, and they also give you new customers and more business. So that's how we look at that loop.
And like I said, it's a healthy mix of both, right? They should look at basically the flywheel approach and the kind of business that they're in, right?
Absolutely. They should be looking at a flywheel approach, and then based on the business stage and maturity, what should happen is when you are a new brand and business, of course, a lot of your business and new customers or transactions would be coming from acquiring new customers. But eventually that mix should go from say a 80-20 to a 60-40 to a 50-50 or even lesser, where you're getting more business from your existing customers, and then you keep acquiring new customers to keep growing the base and the business. So ideally, you want the users who you've already acquired to keep transacting with you for a very long time, as long as you're providing enough value for them.
Okay, I mean, this is very interesting for me, and you've set the would large brands, say brands who have already been 6 years into this journey and have achieved, say, 100 crores or 500 crores, but they have now a thought process to go to 10,000 crores or 5,000 crores in revenues. Do you think participating in the program makes sense for them? And in the end of the day, I think the startup thing is it's not about the number of years, right? It's anybody. They can be 13-year-old companies and still participate in the program, or is there a ceiling?
Yes. So certainly there is a ceiling to this, Vishal, because what we're trying to do is, because the program itself is very hands-on, which means our team has to spend a lot of time and bandwidth working with these startups. And for that reason, we are able to only work with specific or limited set of startups every year. So year one, it was 50 startups. Last year, it was 100 startups that we worked throughout the year. This year, we are aiming at 150 to 200 startups that we would want to work with and impact through this program, which means that we have to pick and curate the startups which actually are at an early stage and not serve or not give these benefits to the bigger company or a startup which has raised a growth like a Series BC round, who has enough money, enough people, etc., and they're just trying to get a bargain for the sake of it, right? So we want to avoid those and benefit the very early stage ones. So from that perspective, we've kept a ceiling where we say if you are a company more than 3 year old or if you have more than 50 employees, then you are a larger company and not a early stage startup. So we do not want you to benefit from this. We want the early stage startups to really benefit from the credits, etc. So that's the ceiling and cap. But if you were to ask about, say, is retention important for a large corporate, which is maybe 5 year, 10 year old, or even hundreds of years old corporates? Yes, retention is important. Engagement is important for them as well. And enterprise also happens to be a large part of WebEngage's business. But this program per se is meant for very early stage startups, and we want only them to actually benefit this free credit from these free credits.
Okay. A lot of people would like to know from you retention marketing strategies a startup should use to become successful. What are some of the strategies? Let's look into quick thought process from you as to what is retention marketing and what are those 5, 6 strategies that they have to use to be successful in the early days?
Absolutely. While I think this would require a master class in itself and maybe another podcast for an hour or more to actually deep dive into this subject or topic. But if we were to look at and break down some of the topics around retention marketing, what you should be doing is retention would kick in right after you've acquired your customers, or rather, right after the visitor or user has landed on your website or app. So, right from there, retention marketing would kick in, which would involve looking at the behavior data, usage of the platform, the drop off point, etc. So starts with getting the insights, using those insights or actioning those insights by saying that if the users are dropping off at the sign up stage, if you're a fintech, there's a whole KYC process, and you see a lot of users dropping off there, which means it's important for you to address those drop offs by engaging, re-engaging your users, building that trust, etc. So that could be one of the strategies. Or if you're a commerce company, you see a lot of drop offs at the cart stage where people add products to the cart, but they don't purchase, looking at the price or the shipping cost, etc. So you want to again build the trust and incentivize the user to come back and complete the transaction. So that could be one of the strategies in the top of the funnel. And then once the user has started using your product or services, you want them to stick to your platform or your offering, which is where you need to measure the retention or stickiness quotient on a monthly, quarterly, annual basis. How many of these users are actually coming back and either engaging with you or transacting with you? So that's another important part if you were to look at retention. And then you want to build out loyalty and referral out of this engaged and happy and retained user base. So those are the larger points. Again, it could be broken down further and further, and it can be a conversation in itself if we were to keep talking about it.
Now, I'm going to hold you on that. We're going to do another podcast on retention marketing. It's something that most companies should attend to in the digital space, and if they're managing digital businesses more so. So yeah, so your cohorts, you said this is 2 years old. How many cohorts have you been through? What are future cohorts? What is the current cohort like? And future plans for the WebEngage startup program?
Absolutely. So like I was saying, so the WebEngage startup program started early 2021. First year we were actually doing a pilot and testing the hypothesis, etc. So we ended up in the first cohort, we ended up working with 50 startups at that point of time. Now come to 2022, we decided that this is working and we got great feedback from startups and founders, etc. So we decided to double down on it. And the cohort 2 last year, we worked with 100 startups in the 2022 or the second cohort. This year, we've doubled down even further. We're looking at around 200 startups in the cohort 3 that's ongoing right now. As we speak, we are inviting startups to apply and be eligible and join our program in the cohort 3. So if you're a startup, you could check this out. And talking about the future plan, Vishal. So we're now looking to double down and take this to other parts of the world as well. So this program started with India and Asia Pacific uh, initially. Uh, and then 6 months back, we expanded this further into newer geographies and countries. So I was actually there in Indonesia, visited there for a few weeks. We set up a team there as well to work with the startups, etc. Now we have a whole bunch of startups coming in from Southeast Asia and Indonesia as well. We're doubling down on newer geographies and markets as well. So the idea is to take this program to the globe, or take this program globally, and not just restrict this to India. So that's the future plan, which is work with more startups and in more geographies, and increase the impact that we can do for these startups.
Okay, for me, this is interesting because you will grow with them and they will grow with you. And when they become enterprises, you're ready to enable them the next phase of growth. Is that the strategy?
Absolutely, that's one of the ways we are looking at the, or one of the strategies. And this actually ended up happening where we saw uh, companies or startups which are unicorns today. I've been part of WebEngage journey for 6 years now, and back in the days, we used to see those young early startups like a Grow or an Academy, which was very early. We used to talk to the founders, and they were looking at all of these kind of things. And cut to 2 3 years later, these were larger companies and unicorns. So we continue to work with them, and the idea is how can we enable those next set of startups, and some of them also maybe end up becoming unicorn or bigger corporates eventually in the longer run.
Okay, I think we've come to the end of everything. I mean, in a sense, but I want to ask you, if people are watching this and they want to apply in the program, are there discount codes for them? Is there something where is there a hook where you say, okay, you apply and we give you a 10% off or 20% off? Is there something of that sort?
Absolutely. So the biggest hook, Vishal, is that it's 100% off. So for 6 months, you use WebEngage for 100% off. So it's all for free. No strings attached, no hidden terms, nothing hidden per se. So it's all open there. You use it for free, 100% free. And the way to do this is, so we have an application page, which is the WebEngage Starter Program page or the form. You fill it in, and we just need to curate or ensure that you are an early stage startup and you actually can benefit from this program. We can add value to you, and we'll get you enrolled into our ongoing cohort, which, by the way, we're seeing a lot of traction already. So we're expecting to close that cohort maybe in a couple of months or so. So if you are a startup looking at retention, you should apply and use these credits all for free.
So Nitya, that's wonderful. And since we are sticking at retention marketing, do you read a lot about marketing? Would you suggest any blogs, or would you just say that go by experience and build your retention marketing? Any resources that, apart from joining the WebEngage startup program, of course, where they'll have access to credits, mentors, guidance, right? That's the aim. What would you suggest for them to read from your perspective, because you've been doing this for years now? What is
Yeah.
something that they should keep in mind while they launch a consumer business?
Absolutely. Two things. One is a book and one is a program that I find very interesting and I follow. So there is this book called Hooked by Neer Ayal, which I read a couple of years back, and I keep going back to that book as well, which talks about how do you build products and businesses which hook the consumers and their attention, so that you are able to keep them engaged with your product and services and build out retention, etc. So it's a different concept, sort of, but somewhat related to retention. So I would recommend this book, Hooked. And there is this program called GrowthX Club, which is run in India. That's again a Bangalore-based startup. They run a 8 to 12 week program, and they teach you about growth and retention and all of these practices. If you are looking to build that practice and mindset, you could also look at that program. Very intensive, but heard a lot of good feedback from the folks who've attended that program. So these two things I'd recommend if you are looking to learn more about retention, or just curious about the topic as well.
Nitya, that's amazing. I think the objective, ladies and gentlemen, watching this would be just this. You got to be good with the numbers. If you're a D2C business, it's all about the numbers. Your product story is just the beginning. They have to enjoy it, of course, but if you don't know the numbers, you will lose because customers will not stay with you, because you're also storytelling as a brand, and you need to know why customers are coming back and why you're retaining them. And that's where the startup program from WebEngage helps you. I'll put out the link in the description. You can follow them once this is out. But thank you so much for following this. And thank you, Nitya, for everything. Thank you for doing this podcast.
Thank you so much, Vishal. Pleasure having a chat, and thanks for having me.
I look forward to hosting you soon. Next time it's not on Zoom, but you're going to Zoom into my studio and we'll talk about retention marketing and more. Thank you, ladies and gentlemen.